So what I want to talk about today is tax brackets, okay? I didn't realize this either. I didn't realize this until a while back, and I'm a very astute investor. I've invested all my life. I didn't realize how these tax brackets kind of work. Okay? Say you make $60,000 a year and you're single. I thought, okay, well, I make $60,000 a year. I'm going to get taxed at 22% because I'm in the 39,000, 84,000 range. No, not true. Your first $10,000 of your 60,000, 9,700, I'm going to round it to 10,000. The first 10,000 of your 60,000 gets taxed at 10%. Then the next 29,000, because you're going to minus, gets taxed at 12%, so you're up to 39,000. The remainder, the 21,000, would get taxed at 22%, which if you do your math, 22%, $20,000, that's $4,000. So that's more than these two together. So what you want to do in retirement, as I'm getting closer and closer to retirement, what I want to do is get to where I can keep my butt in this $39,000 and under range, keep myself under 12% a year while making more money retired than I'm making working. Now I've got a few friends doing this, okay? And here's how they do it, all right? I'm going to show you how they do it real quick. So what you're going to do is, I'm going to erase this now that we got that down. Okay. And this is also for FIRE movement too. For everybody that's in the FIRE movement, what I call FIRE movement is find income, retire early. So what we want to do here, okay? Say for instance, okay, I'm going to make more retired than I make working. So I'm going to use 60,000 as like a roundabout figure. But I want to get below that 39K. So I stay in the 12% and under, and even 10% range. But I got to be under 39,000. Okay. My pensions, my government pensions, all right, are going to equal about 24,000 a year, 24K. All right. I've got a few other pensions and things that I've got going on too, and some annuities. But the annuities, you don't pay a lot of tax on those. Good thing. So my other pensions are going to equal right about 20,000. Okay. This is all taxable income. So I'm looking at about 44. I'm not under that 39K, but again, I'm planning on making more money working than retired. So you got a pension, another pension. We're looking at about 44K. Now I have a substantial 401K that I've invested into all of my life. Now I put it in Roth. Okay, I did a 401K Roth, which means I'm paying taxes on it now. So when I go to start drawing it out, I go to do a 4 or 5% withdrawal a year, make 20 grand a year on it. It's not taxed. So that 44K plus that 401K Roth that was not taxed all these years, you're looking at about 64K. Okay, but guess what? Still only taxed on the 44K. All right, that Roth does not count. Now I've got several stocks and I've got some bonds and things like that are taxable. I'm going to sell out of those, and yes, when I sell out of those, I am going to have to pay some tax. That's true, because on the gains. But when I sell out of those will be going into I'm not pumping Vanguard, plus I'm not a financial advisor, let me say that as well. I'm just telling you from experience, from a lot of guys in my investment groups that have millions in the market and are retired very comfortably. What I will do is go with a possible Vanguard, DWAHX is what I will go with, which is a Vanguard Municipal High Yield Tax-Free, okay, bond. I've been averaging about a little over 6% a year. All right. So you take, say for instance, you're going to take and put $100,000 in there, and you're going to get do your 6%, take your 6% average it gets every year. All right. So that's another 6,000. So that 64 has now gone to 70K. That's only if I put 100,000 in there. Okay, it's now gone to 70K, but guess what? Still only taxed on that 44K. So again, this is just a good example of how to get some passive income, all right, in retirement, and be able to keep yourself to where you're in that lower tax bracket, so you're not going to get whacked on taxes. So again, this also is very good for the FIRE movement, for the people that go through the FIRE movement. Let me do that real quick here while I'm on here. People that go through the FIRE movement, find income, retire early. I know everybody's probably heard about that. A lot of younger generations doing that. They're working their ass off, putting a lot of money into funds and things and living off of the income interest. And yes, you can do that. It's possible to do that. I know a lot of people, I'm not going to name her last name, but Susie, there's a lot of people out there that say, oh my God, don't do that, you'll go broke. Yeah, bull crap. I've known people who've been doing this now for 20, 30 years, and they've rode the market ups and downs. So if you're getting into a good, especially if you're going to put it in tax-free, but even if you're not, you're going to get, a Vanguard Wellington bond fund. You're looking at, 4 or 5% a year. Same thing with Vanguard tax-free munis, 6% a year. So if you're going to do that 2 or 3% withdrawal from your principal a year, and then your interest withdrawal a year, you'll be just fine. Now, one of my friends, what he does is, he's got a lot of ETFs and a lot of tax-free munis and things like that. What he does is, say he's got, I'm going to use a real small example. Say you got 100K in there, and you're getting 6% return average every year, so you're making $6,000 a year. Okay, you want to eat at some of the principal eventually because you don't leave all that on the table. Unless you got kids, family, you want to leave that too. That's fine too. So what he does is, let's say the first year it makes 6%, so he gets 6,000. Next year it makes 4%, so he only takes out 4,000. Next year it did 3%. So he only takes out 3,000. Next year it did 8%. He takes out 8,000. So you see what he does? He rides whatever yearly interest comes off of that. He never touches the principal, but you're going to get up and down. That's just where you have to set yourself a budget. And very easy to do. For all you FIRE people out there that want to do this, this is the way to do it. Okay, that way you're never touching that principal until you get much older. Then start chopping away at it. Again, like with me, no heirs. So I'm going to start chopping away at my principal as much as possible. Okay, I'm not going to talk anymore. I want to keep these things short and sweet. Have any questions? I'll put all this in the post below. Hit me up below. I'll be glad to answer any questions. All right. Thanks everybody, and God bless, and have a great day.